In this video, we'll talk about an indicator called ADX, or many platforms refer to it as DMI or Directional Movement Index. And I'll just try to explain how I use ADX to weed out wrong trade ideas. If you look up any training material online for ADX, you will find people talking about how to use ADX to generate new trade ideas. The way I use ADX or DMI is to avoid getting into wrong trades. So, DMI or the Directional Movement Index consists of three separate indicators. So, what you will notice is uh, there is a center line which is blue here, which is called the ADX, and ADX basically measures the strength of the current trend. Whether the trend is bullish or bearish, it doesn't matter. It just shows you whether the current trend is strong or not and how strong it is. And then it has two more lines. One is this green line, which is called the DI plus or plus DI. And then there's a red line which is called the DI minus or minus DI. And whenever the red line is above the green line, that means currently the trend of that equity is bearish. And when the green line is trading above the red, like in this case, it means that the current trend is bullish. ADX is a range bound oscillator and goes from 0 to 100. And if it's above 25, that means the current trend is strong. Usually, when the ADX is below 25, you will find that you are in a choppy market or in kind of a consolidation phase. Now, as I pointed earlier, if you look up any material on DMI or ADX, you will find people telling you how to use DMI or ADX to find new trade ideas. One thing you will see popping up quite often is this concept of the DI plus or minus lines crossing over each other and those points generating new trade ideas. So this example that I'm showing you, the red line just crossed over the green line. Similarly, there's another crossover here where the green line is crossing over the red and the ADX is already strong in this case, so it's above 20. So this could indicate the start of a new trend, and in this case it did happen. So you will see a bullish trend starting here. So that's how most people use ADX. Now, the way I use ADX is, first of all, I use it to avoid choppy markets or consolidation phases. If you have read any book on Dow theory, one thing Dow points out is that equities trade in three ways. Either they go up, they go down, or they go sideways. So when an equity is stuck in a tight range and it's going sideways, it's called consolidation phase. And usually, especially if you're trading directional strategies like I do in my trading method, a sideways move is better avoided. You don't get too many opportunities to make profits. You want a directional move to be happening in the equity to make money. So one thing that I use ADX for is if the ADX is below 20, that means the equity is kind of stuck in a consolidation phase, like you can see here. So I would prefer to avoid taking trades in these situations because the trading range is hardly anything in these cases. The second thing I use it for is to measure the strength of the trend. So if you notice at this point, when the ADX is coming out of this 20 region here, the yellow line indicates the 20 area, a new trend has started. The stock has come out of a consolidation phase and a new bullish trend has started. Now, once it's above 20, that means there is a trend in place. It could be bearish or bullish. And in this case, you will notice that the green line is trading above the red line and ADX has just crossed 20. So that would mean a bullish trend is starting, and from this point on, you can use ADX to measure how strong this trend is and at what point will the trend exhaust. I'll get into more examples in Think or Swim, but in this case, I just want to show you that if you are not looking at ADX, if you're just looking at this chart and you have been watching this equity, you would think that the equity's range is trading range is this. And then once it crosses, it comes out of this consolidation phase, this appears to be a big move. You could think that at this point you should take a mean reversion or bearish trade because the stock has is trading way beyond its normal trading range, which might be thinking that the normal trading range is this. So compared to this new move that just happened sounds like a big move, and you would there would be a tendency for somebody to take a bearish trade at this point. So although the stock came out of this consolidation and shot up to the upside, you will notice that the ADX is increasing, is going up, which means that the bullish momentum is actually gaining more strength. So this is not the right time to take on a bearish trade. So if you notice that the ADX is constantly rising up until this point, and from here to here there was a strong bullish momentum. So you should avoid taking a mean reversion trade when the ADX is gaining strength. You would Now let's switch to Think or Swim and take a few examples and explain how to use ADX. So this example that I have pulled up for you is Apple, and the date I have pulled up is May 1st. So Apple had earnings on 4:30, and you will notice that it shows you here that Apple opened at 289 and shot up to 294 on that day. So now let's go ahead by few days to this to 6th of May and see what happens. So you notice that after earnings, Apple is continuing to go up. So now if you compare this trading range to the previous range, you might start thinking that it's coming up to a resistance. So if you just draw support and resistance, this is a resistance line. So you would think that 300 is resistance and maybe Apple will pull back after that and maybe start going down. But what you need to notice here is how the ADX is behaving. So first of all, let's look at this green indicator, which indicates that Apple is in a bullish trend. And now you will notice that ADX is beginning to pick up. Once it goes above 2025 area, that means this trend is strong. So let's see how this trend progresses as we move on with time. So let's jump by 1 week. And you will notice that Apple is going up. It actually crossed this resistance, broke through the resistance and shot up. And now I look at this point, it's almost at its previous high here. So at this point, and with the red candle, you definitely feel like you could go bearish on Apple for a mean reversion trade. But what you can do at this point is just keep paying attention to the ADX. Now the ADX is at 27, which means this trend is strong. And although it appears that the DI plus is pointing down and DI minus is pointing up, and the trend might be reversing, but it's too early to say. So as long as the trend is above, the ADX is above 25 and DI plus is above DI minus, we have to wait. So let's go another week. So that's the DI plus pointing down and DI minus pointing up. It did have some effect on the stock. So there was a minor pullback. So from 318 to all the way to 300, there was a minor pullback, sure. but the overall trend, uptrend, is still intact. And in these situations, instead of taking a mean reversion trade, what I would do is I would actually consider it as a pullback and trade in the direction in which the current trend is, which is bullish. So I would have actually bought a 305 call spread on Apple instead of taking a bearish trade here. I would have put on a bullish trade here. And also notice that after the small pullback, the ADX is continuing to go up. That means this trend is not stopping anytime soon. Let's add another week to the current date and see what happens. So ADX is still getting stronger, and although it feels like Apple is choppy, but it's making new highs. Let's keep going another week and look how the ADX is behaving. ADX is now at 36, which is very high, and now the DI plus is further turning up. So at this point, so you can use this to avoid taking mean reversion trades. You can use ADX to see how strong the bullish momentum is. So I'm going to go like maybe a couple more weeks and see how it behaves. So as time is going by, the ADX it keeps getting stronger. So no matter how high the stock is, no matter how many new highs it's making, you cannot take a mean reversion trade. So you have to respect the strength of this momentum. Let's take another example, this time of BKNG, and this will be a bearish example. So in the previous example of Apple, I pointed out that how you can avoid taking a mean reversion trade when the momentum was bullish. Uh, this is BKNG's chart on March 2nd. This was, when the coronavirus crash was in the works. It was about to happen. So if you notice that earnings on BKNG were on 226, and it had a pretty good drop on 226. Now, after that, it started to recover from that drop. And this drop seems excessive at this point because if you compare it with the previous trading range, it's like really all the way to the downside. So let's see, should we have put on a bullish trade at this point, because looks like this drop is exaggerated and it's done. The only thing at this point, the ADX seems to be rising up, and the DI minus line is on the top, which means the bearish trend is in place, and the bearish trend is getting stronger. Now, if you were to put on a bullish trade here, a mean reversion trade, let's see what would have happened if we just go to the next week. So there was a brief reversion, but then look what happens. The stock continues to go down in the original direction. ADX is getting stronger and stronger. Do you think you should put on a mean reversion trade here? If you thought this was low, then this is definitely a good entry point, right? So let's just skip one more week and see what happens then. If you notice, there was a low here, there was a low here. It looks like it's continuing to make new lows. And if you just simply pay attention to ADX, you would not get into a mean reversion trade at this point, and you would want to wait out. Let's see at what point would we want to take a reversion trade here. So skip one more week, and another new low. And ADX is really high. ADX is super strong, indicating that this downward momentum is very strong. Let's keep another week. Finally, you will notice that at this point is when ADX starts turning down. and DI minus is still at the top, which means bearish momentum is still stronger, but finally it's starting to weaken. So this is an area where you would want to take a mean reversion trade. So either, I know it will be very hard to spot this point because it's just flattening out at this point. Most likely at this point, you would want to get into a bull call spread on BKNG as a mean reversion trade. So let's skip one more week. And you will notice that if you had put on a trade here, which the price is 1200, 1205 bull call spread, okay, it recovered, then it went down back to 1200. Maybe there could be another opportunity for you to put on a trade if you missed out on this trade, and then from that point on, looks like it's beginning to recover. Now let's see how it played out. So add another week, and you will notice that the stock has finally begun to reverse directions. So it's going up now. So if we had bought our spread here or here at 1200, 1205 or 1200, 1210, then at this point it's already at 1400. It's like $200 above our price point. So you would have made good money. And let's just see how. So this is 330. Let's see how it played out. This hypothetical trade. This hypothetical trade played out in a month, since we do our spreads mostly for a month. So instead of so 330 is when you would have put on the trade. Let's go to 430. So we had put on the trade here. BKNG is at almost at 1500, which is 300 points above. We only needed $5 or $10 move, so it would have been 100% profitable trade. If you look up any training videos on the DMI indicator or ADX, you will notice people talking about how to use DI minus crossovers to spot trades. I personally don't use them to spot trades. I have my own methods, as you know, and I primarily use ADX to avoid taking on trades. But since we are on the topic, I still want to touch on a couple of examples of what the crossover trade really is. So if you want to learn about how to find new trade ideas when the DI plus and DI minus are crossing each other, then this is a great example. I have pulled up BKNG chart on January 1st. And well, this date, if you go on this date, which is 10:15, you will notice that ADX is around 22, so it's above 20. And you will notice that the DI plus line is coming from the bottom going up and crossing over the DI minus line. So at this point, what it says is when these two lines cross over, that means a trend change could be happening. So the DI minus was the negative trend, the bearish trend was strong here, and at this point DI plus is crossing over DI minus, so it could indicate a new bullish trend which could be starting. So you could, at this point, the price is 1988 or 1990, you could have bought a 1990 1995 bull call spread on BKNG and traded it that way. So after this, it did go up slightly. That's one example. Another example could be, there's another crossover happening here. So this crossover, you'll notice that a new bullish trend and a very strong bullish trend is starting here. So you could have put on a bullish trade somewhere over here and made money that way. Another example could be a bearish crossover. So in this case, there was a bullish trend in place, and then look the DI minus line is crossing over the DI plus line. And one thing you'll notice, if you watch any of the videos on using crossovers, DMI crossovers to find trade, is that the sharper the line turns toward each other, the stronger the trend, the new trend will be. So if you don't notice, in this case it's coming down from bottom and just literally vertically going up, crossing the DI plus line, and ADX is very strong, so that means a strong reversal trend could be coming up. So if you had noticed this point, you would have already missed this downwards move. So most likely you would have put on a bearish trade here at 2005. Let's say you bought a 2005 2000 bear put spread, and this is 121. So let's fast forward to 221 and see how that trade could have played out. So we put on the trade on 121 here, and on 221 the stock is at 1920, which means we would have made full profit on that bear put spread. Also notice that although on 121 it appeared to you that you had already missed out on the downward momentum, it kept going down after that all the way to 1820. So that's how you would use crossovers to put on trades. But again, I want to mention that I don't use crossovers to find new trades. I only use ADX to eliminate the wrong mean reversion trades. And before I end this video, I just want to mention one more thing, that when ADX is below 20, you will most likely find that the markets are choppy, and any kind of signals that you are getting from indicators are not very reliable. So whenever you're using ADX to find a mean reversion trade or to avoid a mean reversion trade, make sure that the ADX is above the 20-25 line. The stronger the ADX, the clearer and more reliable the signal is.